Hi there, I'm Kevin Reid and welcome to the second in a series of 3 videos about wealth management and financial services and their impact on your accounting practice. Now, our first video discussed the positive impact of building a wealth management arm. This video covers how to build an offering. I'm joined by Foulger Underwood, Stephen Tucker. Stephen, first question. If someone asks you, how do I build an FS arm? What would be the first steps they should take?
Well, I think the first thing, of course, is with all these things, it's about the planning and understanding what your end goal is. So if the intention is to build something quite significant with material capital value, then you've got to look at your resources, your capacity to make referrals into that, and the costs of running that business. And as you would with any business, look at a decent business plan. If, however, your intention is somewhat smaller scale, then there are other options to be considered. There isn't, sadly, a simple, idiot's guide to how to build an IFA practice. Every single occasion when I look at this and talk and provide consultancy services, there are nuances and differences depending on where the accountancy practice is and predominantly really what they want to get out of it. What is their exit strategy and what are their long-term goals? So I'd love to give you a 2-minute answer of how to do it, but I don't think I can.
If someone said to you, Guy, what is the time, people and financial investment required and how long can it take to build an IFA? I know you're going to suggest, well, it's horses for courses, but what kind of things would you say? What are the parameters or the aspects of doing this?
Yeah, well, it's never a straight path. There are always twists and turns and changes along the way. I mean, if it was easy, everyone would do it. And if it was that easy, then they wouldn't need somebody to consult to tell them, there's a better way of doing it and so forth. So, I mean, it is about resources. It is about client referrals, and it's about that exit goal. But there are simple ways of doing it. I mean, if it's not about growing wealth in the IFA arm for the partners of the accountancy practice, just refer your clients to a good external firm and be satisfied that you're doing a good job for your clients, but you're not building value for yourself. If you want to build value, but you don't want to run the business, well, what about a JV? If you have an exit strategy and it involves significant sums of, or expected significant sums of money at the back end of it, then you need to own it either in part or in whole. If it's in part, then you can cozy up to an existing IFA and talk about a JV or a part ownership structure, or you can simply go and build your own vehicle. And I would suggest that probably, because these things just evolve typically, most practices will go through that sort of sequence and will start with external referrals. Then they might do a JV. It might not be successful. Then they might do something that's a bit closer to them before finally they start employing their own staff and build their own business and so forth. So, I mean, it is a twisty turny path, and it depends where you're starting on that path as to where you go next. But it's extremely doable and it's extremely fulfilling and worthwhile.
Brilliant stuff. Stephen, as ever, thank you. Please contact us if you'd like to Foulger Underwood to help you build a wealth management or financial services arm, or for any other practice improvement or M&A matters. And join us, of course, for our 3rd video in this series.